the money printer go burr, that's not just a US thing. It's a global phenomenon. And Japan, okay, they've been the odd man out. So it's a bit of a weird one to ask based on what Japan is doing, because where most of the rest of the world has had one problem, Japan has had an opposite problem recently. But yes, it's interesting that they finally got inflation after all these decades. They finally got inflation, and now they're trying to balance struggling with that, but also the weakening economy. So it's sort of telling that they're doing stimulus. Of all places, that Japan would jump into that ring. But again, Japan is Japan. I think the global central bank buying is huge. That's really, really important. But I don't actually think that's the driver. They're certainly not trying to push prices up. They're trying to accumulate. If anything, I think they're the new dip buyers that have put a floor. So something else is causing it to ratchet up, and the central banks are preventing it from falling. Like, it ratchets up, but then it doesn't go down much, because I think the central banks step in and buy those dips. The something else is, as always, it's never quite simple. There's no one thing. I think it's a combination of the above of what you said. I do think the big story, the long-term big picture, the macro is the debasement trade. And it's really funny that, gold bugs have been talking about this for 50 years. And now suddenly it's become a trade on Wall Street, the debasement, like they just discovered currency debasement, that fiat actually, has no backing. But I do think that's part of it. The late great Richard Russell, when people called him a gold bug, he used to retort, "No, I'm not a gold bug. You're a dollar bug. That's the real, somebody today I posted something about an AI bubble, and somebody snarked, "Oh, gold is in a super bubble." And instead of getting offended, I wrote back and I said, I think really the mother of all bubbles is the US dollar and the whole fiat experiment. If that blows, everything goes. And I'm not digressing. This is actually the answer here is ultimately that's what it comes down to. Gold as a store of value, more time tested than Bitcoin by a little bit, right? Is giving you it is the yardstick of the debasement of the depreciation of the dollar over time. And sure, it's volatile, long and variable lags, all that stuff to the various policies. But pull back and look at a big picture of gold versus the dollar since Tricky Dick Nixon slammed the gold window shut in 1971, and it's a giant X. Yeah. And to me, that's really all you really need to know about this in terms of fundamentally what's going on. Short term, the wiggles, will the Fed cut 25 basis points? It matters on the margin, but not really for the big picture.
Yeah. So on gold and silver, what's kind of your price targets for next year? What's kind of your gut feeling?
As I said, I'm a due diligence guy. Okay, you want a price target? Let's see. No, I don't do price targets.
Okay.
As a speculator, I'm happy if I can just get the direction right. And maybe I'm obsessive compulsive and I hate being wrong. And if you give a price target, you will be wrong. Upwards. And actually, for me, as a cautious, disciplined due diligence guy, that's really quite something to be saying that I think directionally we're looking at upwards from $4,000. The mainstream thinks, oh, gold's in a bubble, $4,000, that's really high. But if the big picture that we just talked about is true, the real question is, well, are they going to start printing fewer dollars? Are they going to reduce the money supply? Why would this multi-decade trend end? It can fluctuate, but why would it end? There's nothing on the global scene, and it's not just the dollar, but all the fiat little pieces of paper we imagine are money, right? There's no end. As Lynn Alden likes to say, there's no stopping this train, right? So I when people say, Lobo, would you really buy gold at $4,000? Well, if I didn't have any, I sure would. And I wouldn't sweat the volatility along the way, because ultimately nothing stops this train. It's a one-way, the money printing never stops until the currency blows up and gets replaced. So that's bullish gold. Now, if you ask me where we'll go this coming year, what my price target for 26, I'm just not going to do that. It could easily fluctuate downwards. It could be that we've got a bit of a plateau here and that it consolidates and corrects for some time before going up again. Even if we're looking at a giant Head and Shoulders. Who knows that this isn't the head, right? Is what I'm saying. But I don't think so. I think it's another shoulder. And if 4,000 is like what it was at 3,000 or 2,000 when it consolidated for a while, there was quite a volatility. After gold hit 2,000 in 2020, it dropped down like $300 at one point.
Mm.
And so if it did that now, that'd be a $600 drawdown, which takes us to, I'm not a technical analyst, but the Fibonacci guys talk about 37, 38. From almost 44, a $600 drawdown would take us to that same level. So what I'm saying is that would be nothing scary. That would be what we've seen in this recent bull market, uninterrupting the market. If it goes down more than that, then that'll be more significant. Long story short, I think it's going upwards. I don't know how long this period of consolidation will go, but the longer it goes, the less it looks like a peak and the more it looks like a shoulder, and the next big move will be upwards. And that includes silver in that too.
At the heart of the metals surge is a macroeconomic story older than modern markets themselves: currency erosion. For decades, only gold enthusiasts discussed the fragility of paper money. Then suddenly, Wall Street caught on. The concept of fiat money losing value has transitioned from a fringe warning to a mainstream investment strategy. Legendary analyst Richard Russell famously reframed it best: skeptics of gold aren't metal critics. They're defenders of a currency that's failed the test of time. Gold serves as history's most reliable measure of monetary decline. Price swings matter, but zoom out, and the narrative is clear. The printing presses run while purchasing power quietly fades.
Well, for one thing, just valuations. Trees don't grow to the moon, right? So just on a fundamental basis, if it's going to take 50 years for a company like NVIDIA to earn into its market cap, are you going to tell me there's no innovation in 50 years that could displace it as king? Right? Even like they're pushing back. NVIDIA, the CEO today, Jensen Huang, said, "Oh, we're no Enron. Like, we have a real business here." Okay, that's fine. They have a real business. They're selling these chips. They're sold out. Great. The next DeepSeek moment could completely torpedo the whole thesis. What if we don't need those GPUs? Like right now, the other headline today is that Google is selling, apparently they've just got an agreement with Meta to sell a bunch of their TPUs instead of GPUs. Like, who knows what headline tomorrow could radically change the whole business model for NVIDIA or the whole AI thing. So I think at the very least, it pays to take out insurance and not just assume this has to keep going higher, higher, higher. And I'm not an IT specialist either. I kick rocks for a living, but I look at what we call AI today, and it's not intelligence. It's at best a smart system, an expert system. I'm not saying it can't be very helpful. I'm not saying there aren't a lot of jobs at risk, but it's not actual intelligence. It's guessing at what the right answer is, and it's really good at guessing. That's not the same as thinking. If we get to this artificial general intelligence, that will be an interesting day. What the implication? But what if that is not built on LLMs? That tool, the LLM, this guessing for the right answer. What if that's a dead end, just completely the wrong way to go about solving this problem? And right, you and I, the gray stuff between our brains does not consume the entire output of a nuclear power plant. It does not read everything on the internet to guess at what the right answer will be. Obviously, there's a slightly more efficient way to go about intelligence than what these LLMs are doing. So if that's the wrong path, and the new path is something much more efficient, and it doesn't take a football stadium full of GPUs, I think AI conceptually is the real deal. And it is game-changing, transformative, as impactful as the internet or the industrial. I think all of that is actually true in time. I don't think we're there yet. And there are huge questions about the specific technologies and solutions to get there, and the companies implementing this. Like the hundreds of billions of dollars we're spending to build giant NVIDIA GPU farms. What if that's not well allocated capital? What if it's the wrong path, right? So that would be bad enough. If it was just tulips might not be worth 100,000 guilders per bulb, that would be bad. But with so much, like the markets are up and up, 25% gains 2 years in a row. That's because of the Mag 7. So if they blow up, the markets blow up, the wealth effect goes into reverse. The whole economy takes a massive hit because it's not just this one little niche thing. It's that one pillar that everything else is standing on. Doom and gloom here. I'm not predicting an imminent market crash, though I would certainly want insurance in case that is what's ahead.
Market bubbles always create loud opinions. Recently, some investors began labeling gold a bubble at historic highs. But the real unsustainable experiment may not be gold. It's the currency being measured. In a world driven by AI optimism, rising debt, and economic tension, metals provide something stocks and options never can: permanence. No expiration, no counterparty. Even treasures recovered from centuries-old shipwrecks surface intact, valuable because they are real, finite, physical, and globally trusted. In contrast, digital and equity manias demand constant growth assumptions. The wisest investors prepare, not by predicting perfection, but by holding assets with no end date.
Yeah, definitely. And I think you're right. It would definitely have huge effects on the market if there was an AI bubble crash. So, what type of insurance should people be taking in an AI bubble crash event?
I just tweeted about this today as well. Michael Burry has his new Substack, and he's famous for The Big Short. And the problem with going short is that even if you're right, if you don't have the timing right, you lose. Like if you buy options and you go short on the options market, those options have an expiry date. And so if your prediction, you could be 100% right, but it happens the day after your options expire and you're screwed, right? You are out a lot of cash. So I'm not a bit, maybe smarter people than me can figure out, maybe Michael Burry can figure that out and they can make billions shorting the market darlings. I'm not going there. The simplest form of insurance, of course, is bullion. The beauty of owning gold and silver bullion is that there's no expiry. It is that financial asset, the long for which there is no short. There's no counterparty risk. There's no expiration date. And sorry, silver bulls, gold doesn't tarnish. Right? You can hold it for centuries. We dig up treasure ships that sunk hundreds of years ago, and it's worth all this money because of not just the historic, but the intrinsic value of the metals themselves. So that's the easy answer. If I'm right about that and you want a bit more risk, but you still don't need to have the timing perfect, then you can go along the gold stocks. And the easiest ones would be ETFs or the majors that they're going to move with gold with some leverage. And then you can go down the food chain to the mid-tiers and the juniors that have more hockey stick potential, whether you're trying to make money or preserve money. It's a different choice there. But that's to my mind, gold bug likes gold. That's not much of a headline for you there. But if you think of gold as a safe haven asset, as a stable thing that you can hedge your portfolio with, I just think that makes a lot of sense. If we're talking about an epic bubble blow up of the proportions that are really economy shaking, sure, everything gets whacked at first, including gold and silver, and maybe that's the time to buy. Like if you're not sure what's going to happen, you think 4,000 for gold and 50 for silver is kind of rich. If this blow up happens, everything will get whacked, including gold and silver, and that would be an excellent time to step into that marketplace. Now, it might not happen. It might just be that we consolidate, go higher. So I would not want to be short in the sense of not short contracts, but short in the sense of left behind on bullion at this point.
Forecasting exact prices is a dangerous sport, even for seasoned analysts. Many avoid it, not due to uncertainty of direction, but inevitability of inaccuracy. Predicting a number guarantees being wrong. But identifying a trend? That's different. Few doubt the upward gravitational pull inflation and monetary policy place on metals. The global economic landscape provides no evidence of shrinking money supply or slowing stimulus. The question isn't, is $4,000 expensive? It's, what fundamental force could realistically stop a 50-year fiat expansion cycle? Short-term declines feel dramatic, but when contextualized historically, they are expected. Peaks matter less than persistence.
So I have another question. Do you believe the official inflation numbers are accurate, or is the real rate of inflation much higher than reported?
No and yes. Now, interestingly enough, there is a private sector alternative to government inflation statistics. Well, there's several, but the one that's getting a lot of attention right now is the so-called trueflation stat,
Mm.
where they're collecting real-time data on actual prices on, I don't know if it's hundreds or thousands or millions of, it's like it's an internet thing, right? They have a giant bot that goes out and collects these prices and calculates the change. So that, assuming they're not lying or cheating in some way, like that's real. Those are actual price changes from moment to moment, month to month, year to year. Problem is it's only a couple years old, so there's not a lot of historical data or trend data to go on there. But anyway, that trueflation number, the last I heard was like 2.7 or something.
Mm.
So do I believe the government numbers? Of course not. Do I think, it's shadow stats twice that number is right? I don't know. Trueflation suggests that it's not. But I think at the end of the day, what's happening at any given moment is less important than what's happening over time. And that goes back to the beginning of our conversation. The debasement is real, and it's not just the dollar, so it affects all of them. The money printing never stops, and long and variable lags. So trueflation right now doesn't necessarily tell me what will be the consequences of the big beautiful bill over the year ahead, and we'll just have to see. But my general sense, I think, is in line with what people experience when they go out in the world. Things are a lot more expensive. But here's another thing that economists just, this is one reason why I'm not an economist. Like, they have their theories and they have their ways of looking at things. And one of the ways is this whole idea of inflation, the way it's framed by modern economics, is it's a rate of change, right? So if prices are not changing, even if they're very high, but they're not changing, well, we have no inflation. That rate of change is zero. So economists can look at really high prices, ruinously high prices that are driving families broke, and say, oh, but they're not changing, so everything's fine. We have no inflation. Like, that's clearly not what people experience in the real world. And so, yeah, I have criticisms. I don't pretend to know what the real numbers are. I don't trust the government numbers. And I think at the end of the day, what matters is cost of living, and what people are experiencing tells us something about what's going on in the real world.
Do official inflation reports reflect truth? Markets hesitate, households answer faster. A new generation of private sector inflation trackers now collects live pricing across consumer markets, offering digital age alternatives to government data. These metrics are young but revealing. Still, one flaw persists in academic economics. Inflation is framed as a rate of change, not the burden of high cost itself. Economists can observe painful prices that stop rising and declare inflation gone, while families still struggle. True inflation is lived, not theorized, and cost of living remains the loudest ground-level indicator. People sense monetary weakening long before charts confirm it.
Let me just sort of pull back and say more conceptually, big picture. The money printer go burr, that's not just a US thing. It's a global phenomenon. And Japan, okay, they've been the odd man out, so it's a bit of a weird one to ask based on what Japan is doing, because where most of the rest of the world has had one problem, Japan has had an opposite problem recently. But yes, it's interesting that they finally got inflation after all these decades. They finally got inflation, and now they're trying to balance struggling with that, but also the weakening economy. So it's sort of telling that they're doing stimulus, of all places that Japan would jump into that ring. But again, Japan is Japan. The bigger picture from my view is the big beautiful bill, the whole Trump rebuilding America's economy. Whether you agree with it or not, this is not a criticism of the agenda. The point is that agenda is inflationary. And sorry, Doge did not save $2 trillion. And sorry, giving people no taxes on tips and overtime, that's very nice for those people, but that doesn't help balance the budget either. So if you're going to spend trillions more and you're not going to cut spending, that's inflationary. That's part of the debasement trade. So, and Europe, you've got Europe remilitarizing, trillion euro military spend building up over there. That's inflationary. Russia's war is inflationary. China has been struggling with reported deflation for some time. I think that's just a temporary thing due to all those things that they couldn't sell to the US for a while. Suddenly the market is flooded with cheap stuff. But they recently were able to, yay, report positive inflation. Our money is getting worth less. How successful we are. Right? So Japan is an odd thing, but you just look at the global trends overall, all paths lead to inflation. And that is very bullish for anything real, not just monetary metals, gold and silver, but real estate, industrial bases, iron, copper, anything real that governments can't print. Volatility aside, there's an upward trend ahead based on that, the biggest of the macro trends around the world.
Across geopolitics, every economic road now leads to inflation. Military expansion in Europe, global conflict, stimulus in America, and shifting manufacturing demand in Asia all push monetary growth further than fiscal restraint can counter. Governments cannot print land, minerals, or housing. They can only print currency. And when confidence cracks, capital rushes into what is actually scarce. Metals like gold and silver, along with real estate and industrial commodities, become anchors of value in an ocean of expanding paper. Inflation may fluctuate, it may pause, but the global trend is undeniable. The future may not reward what soars fastest today, but what survives longest tomorrow.